Hey everyone, me Kevin here. The Federal Reserve just released their widely anticipated bank stress test results. The stress tests are used to show how exposed banks like JP Morgan, Bank of America, Wells Fargo, and 30 other banks are to losses. Basically, if banks lose a bunch of money because of some event, we'll just happen to reference this one as COVID event, then how much tightening are those banks going to have to do? Remember, when banks tighten, they stop issuing credit cards, they lower credit lines, they stop lending as much for housing and autos, and the economy slows, especially if businesses can't get access to money, and that kind of tightens up the cogs of the economic system, which is bad. Now, some of that has already happened, but the stress tests go to show how much more tightening would happen if banks continued to lose money. So, the Federal Reserve conducted this stress test, which they're required to do by the Dodd-Frank Act. They've been doing this for 10 years now, since the Great Financial Crisis. And what they just analyzed is the COVID event and the results of either a V-shaped recovery, a U-shaped, sort of elongated recovery, or a double-dip W-shaped recession and recovery. And the Fed will use these tests to determine guidelines for banks and how they should prepare for that potential crisis. In the worst case scenario, the Fed found that banks, in this case, that is taking the absolute worst case scenario that they could come up with, and these are people with the money printers, okay? They came up with the worst case scenario, and they said that in the worst case scenario, banks would still be able to lend, which means no financial crisis. That is, the Fed said the 33 firms subject to the supervisory stress test would experience substantial losses, they'd lose a lot of money, under the severely adverse scenario, the bad scenario, but could continue lending to businesses and households due to the substantial buildup of capital since the financial crisis. Basically, banks got enough dough, we're saving more money, the banks would be fine in the worst case scenario. This is really, really important because what we do not want to hear is a risk of a financial crisis, because right now we are in a health-induced economic crisis. That means because there's a pandemic, because we're artificially shutting businesses down, our economy is slowing. That's very different from what we had in 2008. In 2008, the banks collapsed, leading to basically lending to disappear overnight, leading to the collapse of the housing market, the foreclosure crisis because of overvalued real estate and ninja loans and crappy financing and collateralized debt obligations and all the other crap that went on in 2008. That the Fed is not worried about now, but they did drop a little note about stimulus. But first, I want to touch on what the Federal Reserve is requiring banks do right now, because it has to do with that as well. Right now, banks are requiring in the third quarter that banks stop doing any kind of share buybacks, which a lot of the banks have been doing anyway, so that's not that big of a deal. Although, I mean, it is kind of a big deal because banks over the last few years have been dishing out like 70% of their profits via share buybacks. Which share buybacks are just basically a way of them propping up the share price with extra cash they have to reward the people who invest in their company, right? Now, the Federal Reserve also stated that there's going to be a cap on the dividends that these banks can pay. That'll be based on a formula that will be dependent on their income. And so really the whole stress test is just a small blow to investors, but some of this was already expected, so it's really not that big of a deal. In fact, bank stocks are down about 1% to 2% after hours, almost kind of shrugging off these additional requirements. The good news for us, though, and what this means, is avoiding that potential and big financial crisis. The Fed stated that their sensitivity analysis does not incorporate the potential effects of government stimulus payments and expanded unemployment insurance. Basically, putting this into English, the Fed's like, hey, I mean, we have to tighten the reins on banks to make sure they keep enough cash around for the worst case scenario. Even though they'd be okay, we're gonna tighten the reins on the banks a little bit anyway, just in case, unless, of course, the government maybe did some more stimulus, which we already know the Fed is grinding for more stimulus. They didn't have to necessarily include this note. I just think it's interesting because we know the Fed is pushing the government to do more, to provide more stimulus. And here you go. This is them slyly saying that as well. Hey, you want the stock market to keep going up? You want all those investors to be happy that, you're keeping the stocks going up? Stimulus option, which remember, Donald Trump, or you might not even know this yet, Donald Trump was just at a shipyard giving a speech, and during his speech, he made sure to say, everybody here who's invested in a 401k, you must be really happy right now because we're almost back to where we were in the stock market from prior to the pandemic. So you can clearly see that stocks are a high priority for Trump and his administration. All in all, the bank stress test went really, really well. And short of some minor requirements that banks, hey, keep doing a good job and keep having enough cash, we'll put some minor restrictions on y'all. And at the same time say, yo, government, if you want to do some more stimulating, that's okay too. But in the meantime, there does not seem to be any indication right now, at least, of a large financial crisis coming, which is good for preventing possibly that big W-shaped recession and preventing that double dip and likely preventing a foreclosure crisis as well. We want to see liquidity out there. This is a good thing. So this is a report to cheer. Finally, a little bit of good news. Let's hope we get more good news as this pandemic continues to evolve and hopefully disappear. Thanks for watching, everybody. Please consider subscribing. Get your life insurance and your 2 free stocks in the link down below. And folks, we will see you soon.